Folks, joining me now is Patrick Mueller. He is president at Bella Advisors. Let's talk all thing markets. All right, what are you seeing happening today? We are following that 61.47 level from February 19th. We're in positive territory, not quite the all-time highs. What are you seeing, Patrick?
Yeah, I think there's going to be a very positive outlook, especially with the GDP report coming out this morning. The market seemed to have shrugged it off, and I think we're going to keep trudging further. But I think longer term this year, I think we can expect more volatility. We are not out of the weeds yet this year. We're going to see, I think a little bit of a rough ride for the remaining part of this year as we start seeing a lot of these administrative changes and shaking out.
Patrick, I like asking people who are smarter than I am to help me understand things. Undoubtedly, you are in that category. How has the market been able to be so resilient? We put aside the geopolitical concerns, we put aside the tariff concerns, we had additional concerns off that negative GDP print of 0.5%, and yet here we are, we're still in positive territory. What's going on?
I think we've been trained over the last few years just to be more optimistic and jump back in the markets in these downturns. We've just seen this volatility. We had the pandemic and the market's down 30%. And, we had 2022, wasn't so great. And then we had the first part of this year. And I think people, long term, it was just a lot of reactions to the new administration coming in and a lot of the changes. And I think people are seeing that maybe things aren't going to be as doom and gloom as everybody was predicting it to be when Trump came into office. And so I think we're seeing a lot of optimism that way. And we saw that on the reports this morning. We saw a lot of investing in the country and money coming back into the country. We're starting to see this coming in from the tariffs. So I think there's a lot of positive outlook longer term, even though we had a little bit of a contraction in the first quarter, which I think was expected because everybody's nervous on what to do. Where are things going to go? What direction are we going in? So there was just a lot of uncertainty. So the markets don't like uncertainty, and we saw that in the first quarter in the markets. But here later on in the year, as things start smoothing out, I think we're going to see more of a liftoff, but I just don't think we're out of the volatility yet.
Yeah, we had that big surge of imports for Q1. I think that largely helps to explain the anomalous and kind of negative GDP print we had. I wonder on the geopolitics front, if you don't mind me asking, I think Israel, Iran, maybe we put some pain points behind us, but we're certainly not out of the woods just yet. Are there things like Iran potentially blocking the Strait of Hormuz or other potential catalysts you think might make investors a little bit skittish coming up?
It very well could. Who knows? You saw Trump drop the F-bomb the other day that, these guys have been fighting for so long. Who knows what they're going to, try to pull out here in the near future. So you can't count that out of the equation. And I think if that happens, like this administration has been doing, it's been very pro-oil, pro-energy, and let's produce our own stuff. Let's not, worry about importing from other countries and being so reliant on that. So if that happens, I think it will be short term, but I don't think they would be able to get away with that very long because I don't think a whole lot of countries are really on Iran's side right now.
Have you seen any kind of notable investment shift in strategies from investors? Earlier this year we had this move away from discretionary names more into staples. Not a big surprise on a backdrop of uncertainty. But, to our point here in our broader conversation, we're seeing investors put aside a lot of those concerns. Are you seeing any kind of institutional or retail rotation into other names or sectors that surprise you?
Well, we started seeing a big surge back into tech. Tech got beat up pretty good at the beginning of the year, and there was time for a little bit of a pullback. But I think with the surge in AI and where the direction that's going, and we see the earnings really coming the biggest from the tech sector moving forward. I think there's going to be more of a shift going back in that direction. And then there's been a lot of moves that have been going into safety, like Berkshire B shares have done very well so far this year. So, value companies, big companies like Walmart, where people are going to be going and shopping at these places, especially if the economy worsens or people are scared, they're tightening the belts, you're going to see a lot of these, staples, doing very well.
Patrick, what is one broader story in the markets right now that you think we should be paying a little bit more attention to?
One of the biggest things I think that people are sleeping on right now is the consumer debt problem in the country, because it's at all-time highs, record highs of credit card debt. You seriously have people right now, DoorDash is allowing people to finance their food purchases for delivery. It's crazy. So people, unfortunately, I think are fighting inflation that we've had. The price of everything has doubled over the last few years. And it's staggering how much debt that is being stacked up right now, not only in consumer debt, but by the government. But there's going to be a certain point in time here in the near future where that bubble is going to pop. And I think people need to be paying more attention to what's really going on when you're looking at those debt numbers from credit card debt and especially people financing their food purchases.
It's an outstanding perspective and a crucial conversation at a really important time. Patrick Mueller, president at Bella Advisors. Patrick, thank you.
Thank you so much.